Do you want to invest in real estate but are worried about making mistakes that can cost you time and your hard-earned money? Here are some common mistakes that you can avoid, making your investing much less painful. I'm Glen Nelson with Realty One Group West, and today we're going to talk about common mistakes when starting out with investing. Number one, not narrowing down the types of properties to invest in. When you make a decision to start investing in real estate, it can be daunting, and especially when you see what options there are for you. There are single-family residences, duplexes, triplexes, apartment homes, mobile homes, syndicates, buying and carrying notes. These are just a few areas, and where do you start? To avoid overwhelm, pick one type of property that you want to focus on and work to get experience with that type of property. Once you have a good handle on that, you can branch out into other areas, but don't spread yourself too thin to begin. Number two, not having your financial house in order. You need to determine how much assets you have to work with in terms of cash and how much you may want to borrow. Talk to a lender to get an idea of what you can borrow and your comfort level on monthly payments on that debt. If you have an IRA account you want to use to fund your investments, research self-directed IRAs. Now, I am not a financial advisor nor a lender, so be sure to check with professionals before doing that. Number three, failing to manage your expenses. Be sure to set a budget for your projects and stay in that budget. It's easy to spend too much on rehab projects, especially if you underestimate costs of repairs and don't factor in unexpected expenses. Don't over-renovate a property with high-end counters, bathrooms, etc. Remember, you renovate to make money, not live in it. Number four, failing to do your due diligence. Before putting your money out, be sure to know the market and where it is headed in the area where you're considering buying. Know the area amenities such as schools, parks, and shopping. These can affect desirability of the property for renters and buyers. Know the problems in the area, such as any mining, prior military ordnance areas, and what the traffic is like. Number five, not asking for help. Develop a team of trusted professional advisors to help you along the way, and ask a lot of questions. So who are these advisors? Number one, real estate agents and brokers. Two, experienced contractors. Three, trusted lenders and financial planners. Also, be sure to join a local investors group. They can provide support, guidance, networking opportunities, and potential investment opportunities. They typically also have regular meetings to educate new investors. Just remember, you are not in this by yourself. We hope this helps you avoid some of the mistakes that can come from investing so that you can have more peace of mind and more money. Let us know your thoughts in the comments below. If you'd like to see more videos like this, please subscribe to our channel and hit the like button, and we'll see you next time.